to today's video. Hope you guys are doing great out there as always. Today we're going to talk about what to buy in any scenario when you're in a stock market crash or a correction. What are the stocks I'm looking at buying? What are the specific groups, those sorts of things when you're in a troubled market? And conventional wisdom would tell you to go down certain routes when you're in a recession scenario or when you're in any sort of like stock market crash, correction, anything like that, right? Conventional wisdom will say, go buy these stocks. These are the ones to put your money in. When really, to be truthful, it's actually some other stocks and some other groups out there that are far better to be in those scenarios. And I got caught into this trap when I first started investing 2008, 2009. And obviously that time we were in a devastating stock crash, right? I was in the financial collapse. Like there was just a dramatic time in the markets, right? That's an extraordinary event, but I even got caught into certain groups of stocks that you would think would be good groups of stocks to invest in when actually there was far better opportunities for me. And I'm somebody that's been in the market now for well over 12 years, and I've seen multiple stock market crashes now, and I've seen a whole lot of corrections, okay? And so today in this video, this whiteboard video, I'm just gonna give out some game on like what to do in these scenarios, how to prep for them, and where should your money actually be going when you're in any sort of correction or stock market crash in general. So I hope you guys enjoy this. As always, all I ask in return is that you smash that like button. That helps out huge in the YouTube algorithm. I hope you guys appreciate me doing these whiteboard videos, which on Financial Education 3 lately, we've been doing like just straight whiteboard videos. It's at the point now where I'm thinking about renaming the channel just like Jeremy Lefebvre whiteboard videos or something like that, because that's what I've been doing. So make sure you subscribe to the channel if you're not, have notifications on. And also, if you're looking to join us in Stock Hub, that's our free Discord chat. It's absolutely free to join in there. That'll be linked as the pinned comment down there. Might also have that linked in the description area as well. And also, if you have any stock market questions for me, you can feel free to text me. I'll have that as the pinned comment as well down there, okay? Now, first off here, before we get into any of this other stuff on kind of how to prep for it, what to actually buy. You know, a lot of folks always wonder like, what is a correction? What is a stock market crash? And I've seen a lot of definitions and a lot of people throw a lot of things around, okay? As somebody that's been doing this for a very long time now, here's my perspective on this. Here's like literally how I view it, okay? If the stock market, like the indexes in general, specifically the S&P 500, but also the Dow, NASDAQ, things like that, but specifically the S&P 500, if it drops between 5% and 10% in less than 6 months, I call that a small correction, okay? A small correction. Now, if it drops 3%, like that doesn't even register on the radar. Like the market could go up or down 3-4%. Like I'm not going to notice it, right? 5-10%, I probably will. If the S&P 500 falls 7% in a matter of 6 months, that kind of gets a little noticeable, right? So we call that a small correction. If the market falls between 11% and 20% in less than 6 months, I call that a major correction in the stock market. That is definitely a boom, like a jolt. Like you feel that, okay? If the S&P 500 just drops 14% over the next 5-6 months, we're all going to feel that. Trust me, okay? That's a major correction. If you have more than a 20% drop in less than 6 months, I call that a stock crash, okay? And then if you have a negative 30% plus in less than 6 months in the stock market, I call that a holy smokes, this ain't no jokers, okay? Yeah, that's a dramatic crash. That's kind of similar to what we had in February and in March of 2020, right? The stock market fell 35%, I believe, in 22 trading days, which I believe was the fastest stock market crash in history, okay? That was a holy smokes, this ain't no jokers, okay? And this is the type of stuff that even like, you know, scares me. Like this will really like shake me up even. I'm like, oh my gosh, you know, whoo, you know, that's a scary one. And those come very few and far between. Those 30% plus drops, you know, don't count on those coming every year or every month or something like that. Like those, sometimes they're spread out 5 years apart, 10 years apart, 15 years apart, okay? That's not like a normal thing, especially in today's economic system where the Fed seems to backstop everything. You're talking about a 33% drop, a 40% drop, 50% drop, very few and far between, especially nowadays in this type of market, okay? Now, real quick here, this has to be covered because a lot of people don't even prep themselves right for a scenario when we're going to have a correction and crash. And keep in mind, corrections at least happen all the time. Like, this is something that happens all the time. Like, you should expect one of these almost every year, if not, every other year or something like that. There's something you should be mentally prepared for. A crash, maybe 5 to 10 years, okay? A correction, you need to be prepped for that almost every single year, okay? How do you get prepped for that? One is you got to always have some ammo ready. Have some cash around. This is why you always hear me preach on the YouTube channels. Always keep 10 to 30% of your net worth in cash, essentially. And if you don't want to go that far as your net worth, especially if you have a bunch of money in real estate and things like that, then at least 10 to 30% of your stock market portfolio in cash, all right? You don't want to be in a scenario where you have no cash to take advantage of corrections in the market and crashes in the market. And also keep in mind, there's thousands of stocks in the stock market and probably some that you love, right? And probably some that you hold. What happens if that stock falls 20% tomorrow, 15% tomorrow? It happens all the time, especially if you own some small caps. Like, dude, that happens all the time. A company reports a bad earnings, or the company's management team says something that Wall Street doesn't like, or an analyst comes out and downgrades or something like that happens all the time. If you don't have some cash around, you have to watch that stock drop and sit there on the sideline. That's never a fun scenario. So you gotta have some ammo ready at all times, okay? Now, another very important thing is you always wanna be invested into some recession plays. This is how you prep for this type of scenario. A lot of times people think, like, if you're already in a stock market crash or correction or something like that, then buy recession plays. But the truth is, like, before that scenario ever happens, you got to have your money in some recession plays. And so if I look at myself and my portfolios right now, there are several stocks I hold that even if, let's say we were to go into a stock market crash or even a actual, like, recession in the United States, like, there's several stocks I hold, like several stocks I hold, that even in that scenario, these stocks would likely perform very good as far as their underlying business. So stock price, you never know, okay? Though that can move around like crazy, right? But in terms of the underlying fundamentals of the company, those sorts of companies would still do phenomenal. Consumer packaged good companies, I own those. Food companies, I own those. Those sorts of companies, even in a recession scenario or a stock market crash, will do pretty dang well, okay? So you want to have some recession plays in your portfolio. You want to have GVD implemented, which is my strategy, which is around investing in growth, value, and dividend stocks. If you're all just one category, you're setting yourself up for failure or underperformance, right? If you're just in all value plays, there's going to be time periods we go through in the stock market of massive bull markets where growth stocks are going to do unbelievable, right? And if you're only in values, you don't participate in that. Meanwhile, if you're only in growth plays and we have some sort of major correction or crash in the stock market, get ready to get absolutely decimated, because that is what absolutely will happen. If you ever gone through one of these scenarios, you know firsthand, the first stocks that sell off the hardest, spec stocks. Right after that, growth stocks, okay? And then everything else after that. If you've been through it, you know what I'm talking about. If you haven't been through it, keep that in mind long term, okay? Be, in growth stocks, value stocks, and dividend stocks, all right? You gotta watch overexposure to spec stocks. This is very key. What ends up happening is you go through a bull market, right? You go through a bull cycle in the stock market where stocks are just beast into the sky, right? And what ends up happening in these scenarios is investors, they see the gains that the more speculative stocks are getting, right? And they say, I'm in this stock and it got me a 20% gain last year. Meanwhile, this stock over here got a 200% gain. So let me go play that stock. And you have investors start to move to more and more speculative assets, business models that maybe aren't developed yet, companies that are maybe pre-revenue or extremely early days in revenue, right? Where they might have a few $1 million in revenue or $10 million in revenue, $50 million in revenue. Meanwhile, the company has hundreds of millions of dollars in market cap or billions of dollars in market cap. And so investors start to move to more and more speculative assets, right? Because they're looking at this and they're seeing the gains that these other stocks have gotten during the last bull run. They're saying, I got to be in those, okay? Well, when you're in a hot market, right, or a bull market in general, what's going to come down first as soon as that bull market ends? The spec stocks. Now, this already has played out a lot this year. It doesn't mean it can't play out more, but what have you seen since February and March of this year, right? The spec stocks going into February and March were up to the sky, and since that time, all those spec stocks have gone down 40, 50, 60, 70. I've seen some down 80% plus in this time. You want to put yourself in a position of power. Putting yourself in a position of power is not putting a portfolio together of a bunch of spec stocks. So like I said, those might do great in a massive bull market where the market's flying high, but I'm telling you, most of the time, guess what? We're not in a massive bull market. Most of the time, we're in a very steady up market, we're in a flatlining market, or we're in a downtrending market, right? And so this is very, very key. But investors get pushed that way because they see, oh my gosh, there's so many people making so much money over there. Let me go get some of that money. And then as soon as the masses start thinking that, it flips the other way, right? And all of a sudden, boom, that stock just fell 40%. Boom, that stock just fell 60%. That stock just fell 80%. Look at a lot of these stocks that are more speculative since February and March. Woo! I mean, there's just a countless amount of them that are down 50% plus since their highs. Next thing to put yourself in a position of power before you ever get to a correction or a crash in the stock market is you gotta watch overextended option plays. What does this mean? Well, remember, we just talked about it. When you're in a bull market, everything's flying high, investors start to look around at everybody else's gains and they say, I want a piece of that, I want a piece of that. So they start to get more into speculative plays, but they also start to get more and more into option plays, right? Call option plays. And what happens is a lot of times they're buying options on the same stocks that are likely way over extended, that are, these very, very speculative stocks. Maybe they're high growth, maybe they're pre-revenue, maybe they're just starting to reach revenue, and they get way overextended into a lot of short-term option plays. 6 months out, 3 months out, 2 weeks out, things like that. You gotta watch this, guys, because this is what will destroy your wealth ultra fast, okay? Remember, if everybody's doing it, it's usually you kind of gotta flip the other way, right? These are things to keep in mind. You gotta watch overextended plays. I've watched so many people get caught in this trap, and these stocks will hit all-time highs, and then they're like, now I gotta go in options. It's like, what are you doing? Like, maybe the move can continue, but eventually, all stocks take breathers, and sometimes, dare I say, even the best of best stocks will downtrend for 1-2 years after a big bull run. And that's despite the fundamentals of the company being amazing. And newer investors to the market, I've seen it play out. They don't take that into account, and they want to try to play these stocks that have already moved to the sky. And it's dangerous, massively dangerous, okay? And usually it ends in tears, more than ends in people being happy. Let's just put it that way. The people that end up happy are the ones that were playing it before it was the play, right? They were the ones that were going counterintuitive, and like people were looking at other stuff. They were playing those option plays before other people got in. They made a killing, right? And then all of a sudden everybody's late to the game. And you guys know what happens from there. Now, last thing you gotta make sure you do to prepare yourself for any sort of correction in the stock market, a crash in the stock market, is if you are on margin, which the far majority of investors should not be messing around with margin, okay? In order to be even considering margin, you have to have mad experience in the market, prove yourself over many, many years, and get a ridiculously low interest rate. And when I say ridiculously low interest rate, I mean under 3%, okay? If you meet all those criteria, maybe you can do a little bit on margin, okay? Most people are not in that scenario. But let's say you are doing some margin, you watch your percentage before you ever get to a correction or crash. Make sure you have, it's not even remotely close on if you're gonna get a margin call, right? Like not even remotely close. Like you've gotta be prepared for all your stocks to fall 25%. If all your stocks fell 25% and you still didn't have to sell, that's a pretty good scenario, right? If all it takes is your stocks to fall 5% and you have to sell and you're gonna get margin calls, you're setting yourself up for failure, because dude, that 5% could happen tomorrow, literally, okay, literally. I mean, look what happened today. Today as of recording this, Dow was down over 900 points at the lows. Like all of a sudden you can get back-to-back days of that real quickly. Market can drop several thousand points like in a snap of fingers. I've seen it happen a million times before. So make sure, if you are doing anything on margin, okay, which like I said, most people shouldn't even think about it, but if you are, make sure you're watching your percentage and make sure you're running through these scenarios. Most great brokerages, like, I'm with Fidelity Investments, most of them will have essentially a calculator where you can run your margin percentage, and you can run scenarios essentially where if you could put it like, if all my stocks drop 5%, would I get a margin call? Like if they all drop 7%, 10%, 12%, 15%, what if this specific stock fell 20% from here. You can run through all these scenarios so you're at least mentally prepared, like, okay, here's where I'm at in regards to this. Here's where I need to stay away from. Maybe I need to, cash out of some of this margin percentage, build some cash pile back up, or just get on a much less of a percent of margin, okay? So yeah, don't get overextended with margin. That's a disaster, okay? Now, where's the opportunities in a stock market correction or crash? Okay, let's talk about that now. So first thing up here is show me the cash, baby, okay? Show me the cash, before you buy anything. And this is pretty much for any market, even a bull market, but especially in some sort of correction or crash. Because keep in mind, if there's a correction in the stock market or a crash in the stock market, why is that happening? Usually is because there's actual fundamental disbelief in that stock or just stocks in general, and usually it's because there's fear in the economic system. Maybe there's fear about a recession. Maybe you're actually in a recession, right? And so there's got to be something where it's making investors fearful to make them want to sell out of their stocks. And this is why all of a sudden you see the stock market go down 500 points, 1,000 points, 2,000 points in a quick amount of time, right? So folks are scared. So you got to look into companies and you got to say, what's the balance sheet looking like, okay? What's the balance sheet of that company looking like? And are they in a position where they have cash on the balance sheet, okay? And it's so easy to see this, like literally on the Hungry Bull app, okay? Maybe I'll show you somewhere over here. That's, an app myself and Graham Stephan, and we have an unbelievable team there. We've built that out for folks to track stocks, cryptos, read the newsletter, things like that. But also, you have SEC filings tab right in there now. You click on the SEC filings, you go to the 10Q, 10K, and you can see the balance sheet for that company. We're also gonna have detailed financials in the app as well. So you can see exactly, literally dollar for dollar, how much money the company has in cash, in investments, in debts, all those things. It's so simple, and it's literally free, and it takes you 2 minutes to do, okay? It's okay. And so look for companies that have cash, because I can tell you if the company is not in a good cash position and we're in a correction or a crash in the stock market, woo, those are the scariest stocks to be in, because those are the ones that might potentially not make it, okay? And so make sure you say, show me the cash, baby, okay? Next one up here, very, very key, okay? Look for where the major pain is in the stock market, not the safest place. Let me tell you about a mistake I made. So when I was first getting in the stock market, 2008, 2009, and I was first buying my, let's say first 5 stocks, 10 stocks or something like that. If you look at all the plays I was getting into, they were all seen as the safest of the safe plays. I was buying stocks like Kimberly-Clark, which sells paper towels and toilet paper. I was buying Conagra Foods, a food company. I was buying all these stocks during the stock market crash, during a time period when stock prices were devastated, okay? Now, this is a horrible decision. You know why? Because if stock prices are devastated, the ones that are going to go up the least coming out of that scenario are going to be seen as those safest plays. Everybody's already piled into that. Everybody's already piled into Coca-Cola. Everybody's already piled into Pepsi and Kimberly-Clark and Procter & Gamble and Johnson & Johnson, those in food stocks, right? Because everybody's like, oh man, I don't know, if people are going to spend money in the short term at these businesses. And so, the more risky business models during that time period, they're not going to likely make that much money, right? But eventually, those recessions end, the economy gets back to normal, and the problem is, you have these stocks that are ready to 2x, 3x, 5x, 10x in a matter of a year or two, but meanwhile, all your money is in the safest place possible. You want to get into the safer plays before you go through a correction or a crash. Now, when you're actually in the correction or crash, that's when you start looking out there. Still make sure they got good cash balances, but then you start looking at a lot of the growth stocks, because a lot of the growth stocks are going to be the ones that are most devastated. And that's when you can 3x your money, 4x your money, 5x your money, 10x your money in a very short amount of time. That's the thing. Usually, if you want to 10x on a stock, usually you have to wait years for that to play out, right? But in a crash scenario, when stock prices are devastated, a lot of times you can get that 5x or that 10x in a matter of months or years, right? And so this is something very key to keep in mind. It's not about the safest plays when you're already in the crash or the major correction. It's actually looking for the worst pain out there, find the companies that are going to make it through, make it to the other side, and their business model is going to survive. And then as things get stronger again, they thrive again, right? And we saw this back last year in 2020. I remember Nordstrom stock was down to $10, $11. It was like people think like no one's going to spend money at Nordstrom again. Like, of course people are going to go spend money. Saw this in Revolve stock, RVLV. That's a stock I've been able to gain 400 or 500% on in a matter of a year or two, less than 2 years. Literally, I've been in that stock. And you know, it's like, of course that business model was going to survive. You look at the cash balance, you look at the management team, and of course the world's going to open up again. And if the world opens up again, people are going to spend money again on websites like Revolve, right? And so, you know, there was just tons of those plays last year that you could get in and get hundreds of percent gain like in a snap of fingers. Because you gotta understand when the market's going great, people start to think crazy, right? It's like, you know, I got to get into the riskiest play, I got to get into the craziest option play, you know, the craziest business models. They start thinking crazy. And meanwhile, when you're in a correction or a crash in the stock market, people start thinking equally as crazy, but they think like literally every company is going to go out of business unless you sell toilet paper or something like that. And of course, that's not going to play out either, right? And so in each of these scenarios, people don't really like think with their brain. They think with their emotions, okay? And this presents you with extraordinary opportunities out there in the market, okay? Next up here, we're looking for the biggest TAM opportunities and companies that are proving it. So a company, for example, that I should have been buying in 2008, 2009 when I was getting rolled in the stock market is Amazon. Like, why was I not buying Amazon? Like, why was I sticking money in Kimberly-Clark and Conagra Foods and companies like that when really where I should have been putting my money in those years is Amazon. Amazon had this massive TAM in front of them, right? It was a growth stock. It was being beaten down at that time. Like, look at Amazon stock price in 2009, right? And look at it today. And they were proving that they could be successful. Those are the sorts of stocks I should have been looking at. I should have been looking at Apple, great growth company, right? Stock price was beaten down in 2008, 2009. That's where I should have been looking. I should have been looking at Google stock, right? Those were extraordinary opportunities, and there's a lot of smaller companies I could have been looking at as well. I'm just naming some of the big ones that a lot of people know. They had huge, massive TAM, and they were proven they were going to be successful. Their stock prices were beaten down. Those were the place to be in, not Coca-Cola, not Pepsi, not Johnson & Johnson, not Procter & Gamble. Like, look at those companies' stock price, and then go ahead and look at Amazon, go ahead and look at Apple, go ahead and look at Google, look at Microsoft. Like, look at some of those companies, and it's like night and day, right? It's not even close, because the other ones had a crazy TAM opportunity in front of themselves. Meanwhile, the other stocks, everybody was piling in because they were scared, right? Okay? Next one. Don't buy everything all at once, okay? Do strategic buying, okay? And I'll give an example of this, okay? It's kind of a silly example, but imagine you go to the grocery store and you need to buy 30 slices of turkey, okay? For sandwiches you're gonna make that week, okay? And you know, the guy at the deli, he's like, hey, this piece of turkey, 30 cents for this one. And he's like an auction, you're like, oh, I'll take that for 30 cents. He pulls out another piece, you're like, okay, I need 29 more pieces. He pulls out another piece of turkey, he's like, hey, this piece of turkey, 27 cents. You're like, that's kind of a scam. Why didn't I just wait to buy this one? Okay, I'll buy that one. Give me that piece of turkey. You buy that one, okay? And then he's like, this piece of turkey here, 25 cents. And you're like, what the heck, the price keeps going down. Well, you know, the problem you don't want to be in is in a scenario where you're like, I don't want to buy that now because it's 25 cents, right? You should probably buy it at 25 cents too. But now some people start thinking, well, it's going lower, so that means it's just going to continue to go lower. So I'll buy when it hits like 10 cents or something like that. And then the next piece he's like, oh, 26 cents. Then you're like, oh, it's going up. It's going to go back down, right? Then he's like, oh, this one's for 22 cents. And then you might pass on that one. Oh, 22 cents. It's like you were paying 30 cents. Now it's 22. You don't want to buy it. 18 cents. You're like, nah. Then he goes back up to 20 cents. And you're like, oh, no, it's going to drop back down. 22 cents. 30 cents, 35 cents. Now you're like, crap, man, I still want to get my 30 piece of turkey. Now all of a sudden it's up to 40 cents, 50 cents, right? You missed the buy the dip opportunity. And that happens in the stock market all the time. People will either go all in at once when the turkey was 27 cents because it dropped a little bit, right? Or they'll be in a scenario where they're like, I might go lower, it might go lower, it might go lower. And then they just never end up buying. Things start going up, things start trending up. And then they're like, I hope it goes lower. It's going to go lower, right? And then it never goes lower again. And next thing you know, they're stuck out of that stock and they turn into what's called perma-bears. Hope you guys enjoyed this video. As always, hope you learned a lot from it in terms of getting yourself in a position where you can weather a major correction or crash in the stock market and where you know where the biggest opportunities are in the market. Conventional wisdom will tell you play the safest things when you're in the crash. No, actually look for companies that have the cash around, but look for where the major opportunity is and where the major pain is in the big TAMs, okay? That's where the real money is made when you're in that scenario. Before you get to that scenario, make sure you got some of those recession plays and you're doing GVD correctly, guys. Don't forget to text me any of your stock market questions. If you have any stock market related questions directly from me, I try to get back to at least a few people a day. You can go ahead and text me. That'll be the pinned comment down there. Also, if you're looking to join us in Stock Hub, that will also be the pinned comment down there. Those links will also be in the description area. Thank you for watching and have a great day. Don't forget to subscribe, notifications on.